This is a video about accounting standards, which I know sounds really boring, but I promise you is interesting because it relates directly to what's happening right now in the AI world. I know this because I spent 30 years inside corporate finance with companies such as Nestle and Amcor, and I'm a fellow of CPA Australia. And I'll tell you something that might shock you a little, but unfortunately is how the world actually works. People like me are paid to find the space which is both technically compliant and most presents the company's results in the most favorable light. But sometimes companies do go too far. And when they do, the industry comes in afterwards and rewrites the rules. And then the rules, the rest of us have to spend years then implementing. Let me give you a real world example, which I experienced a few years ago. And then I'll talk about why I think that we're seeing it happening again right now in AI. Enron, 2001, everyone remembers the headline, but almost nobody remembers what they actually did. Under the old standards, there were two types of leases: capital leases, which sat on your balance sheet as an asset and a liability, and then operating leases, which didn't. Operating leases were just an expense line on the P&L, and they were invisible from a balance sheet perspective. And that's the loophole that Enron exploited. Enron built an empire of special companies that owned billions of dollars of assets like pipelines, power plants, and infrastructure. Enron then leased those assets back as operating leases. But the debt that financed those assets were off the books. So all you've seen was a clean little rent expense line on the income statement. The balance sheet looked fantastic, but really there was a mountain of debt. And when that went tits up, the accounting regulators had no choice but to take action. It took them 15 years, but eventually they gave us a new set of rules that said every lease over 12 months goes on the balance sheet regardless. So there was no more hiding. And I'll tell you from experience, implementing that leasing standard was an absolute nightmare. We had to find every lease, including leases that were buried inside service contracts like photocopiers, forklifts, office space. And every single one of those had to be measured at present value with an incremental borrowing rate. And it took teams of finance people months of their lives to do that. And that's the price that the entire profession had to pay for Enron's cleverness. Now let's talk about today. One of the best arguments that AI is a bubble, and I do think it is a bubble, is what's happening with circular finance. It's not illegal, it's technically compliant, but it is, in my view, downright deceptive. This is how it works. Nvidia invests in OpenAI, and OpenAI uses that money to buy Nvidia chips. Nvidia books that as revenue. Microsoft invests $13 billion in OpenAI. OpenAI spends it on Azure Compute, and Microsoft books revenue. Oracle and OpenAI sign a $300 billion deal for compute capacity, and round it goes. Now, is that revenue real? Well, technically, yes. Are the contracts real? Yes. Is each individual transaction compliant? Almost certainly. But ask yourself the question that a good auditor would be asking. How much of NVIDIA's revenue is in fact substance? Or how much of it is just investment money flowing back through as a customer? How much of Microsoft's Azure AI growth is OpenAI spending Microsoft's own money? So if you look at this, you'd assume that all that revenue is cash, and cash is a good sign of a healthy business. But it's not cash, it's not recurring, but it's actually pretty clever as well. So when the AI bubble collapses, there will be a new accounting standard for revenue recognition. It'll be probably something around related party disclosure or consolidating economic substance over legal form when investment and revenue flow between the same counterparties. But right now it's legal and it's working exactly the way that Enron's leases worked until one day when it doesn't. And then when that happens, the rest of us will pay way more for compliance, just like we did with that horrible leasing standard. I'm Dr. Errol Brandt, and if you enjoy my content, please consider liking and subscribing. Please also feel free to leave a comment with your thoughts or connect with me on LinkedIn. Thanks for watching, and I'll see you in the next one.